Are you someone who has heard of the Profit First method and you're curious about how it can apply to you as an event professional, event planner, event vendor? Or maybe you are an event planner, event vendor, and you're just struggling a little bit with figuring out your finances and your books and your profit and loss statement, and you're just working really hard and not necessarily feeling the returns on that. Well, I'm going to break down the Profit First method from an event planner perspective based on my personal experience as an event planner in the industry for the last 9 years. And I implemented Profit First method with my accounting and my books in 2020 during COVID. And I've seen some really big improvements. So this is a video I'm making because I honestly wish I had this 10 years ago as an event planner and producer, or even when I started my business, just about 8 years ago. This would have been so helpful to have been doing this from the start. Before we jump into it, I do want to remind you to like, subscribe, turn on that little notification bell so you get notified every single Monday when I drop new videos. I'm also the co-host of the Better Events podcast with fellow event pro Mary Davidson, where we dive even more into these topics. Hear about small business. I talk about Profit First all the time on the podcast. Is one of my favorite books as a business owner. We do have an episode entirely on our favorite books, both business, personal, fun, and otherwise. It's just a fun podcast. It gives more content. I dive more in depth into what I talk about here on YouTube. So give it a listen wherever you listen to podcasts. All right. So what is the Profit First method? And I'm going to link all in the show, I'm going to link to all this stuff down below in my video because I can't take credit for any of the Profit First method, meaning I have not invented it. I am not the person. This is a lovely person named Mike Michalowicz who invented the Profit First method. And it's this whole idea of Profit First is our profit and loss statements. They usually have you do an accounting method where your sales minus your expenses equals your profit. And he kind of flips that on his head because he's found at the end of the day, what his anecdotes he likes to say is like at the end of the day, you have a profit and loss statement from your accountant or yourself, or like for me, it was in my QuickBooks when I was doing it all by myself before my accountant. And you would see a profit on there and you're like, wow, that's so great. I made $5,000, $10,000, $30,000. But where is that money? Because in accounting terms, you have this profit. But in actuality, you've probably already spent it, whether it's paying yourself or your expenses or anything like that. And so it's one of those things that's so, I feel like, hard to put a finger on. And so this is where my eyes kind of lit up in Mike's kind of concept about Profit First, because he's not changing the formula. It's still sales, expenses, and profit. But instead, he says it's sales minus profit equals expenses. So it's the idea that you're taking your portion of profits from every sale first, and then the remainder is left for your expenses. And the really cool part about this is it helped a light bulb in my head for a part of my business that I was struggling with because I could see what I was invoicing my clients. I could see the invoices coming in, and I roughly knew all my expenses as a business owner, but it was really hard for me to understand exactly what I was paying myself, like what was left over. I'm a solopreneur. It's just me, so I don't have any investors or anybody I have to pay. And so like anything left over would ideally be, me being able to pay myself or do different things. And so by doing this method, it's essentially supposed to help you keep your business in check. Because in the book, he has a lot of anecdotes of people's businesses that have grown to, $1 million or $2 million, but they're not profitable. And that blows my mind, especially in the event industry. I also feel like I've known vendors who have gone out of business or closed up shop, or owners that I know who have been in the industry for 30 plus years doing what I would say is something pretty profitable. And they're telling me anecdotally that they're just getting by, which again is crazy because you're going, how are you doing hundreds of thousands of dollars of events or tens of thousands, whatever it is, and yet you can barely pay yourself? By doing the Profit First, I feel like it's a good advocacy for us as entrepreneurs. So the part that blew my mind and I loved, again, it's an old school accounting method, as you might have heard it, is like the envelope method. So you have envelopes. When we all were cash-based, you would actually put, you got $500 in your paycheck. You took it out in cash and you actually put the physical cash in envelopes of like groceries, rent, that kind of stuff. So you couldn't touch it. It was very like set it and forget it. And so the Profit First uses this method virtually by setting up different bank accounts. And the cool part for me was that by setting up these different bank accounts, it helped me just visually understand how much of what was coming in was going to me, was going to my business expenses, was going to taxes. And then it has this lovely bucket called profit. So let me just go through, I guess, the 5 bank accounts you want. You want an income account, an owner's pay account, which is where you're going to be paying yourself out of, an operating expenses account, profit account, and a taxes account. And he breaks down more. Again, I'll link to it, his like 2-sheeter that he's got about what should be a checking and a savings account. You can really dive into it. But having those 5 buckets so that all your money comes into your income account, and then twice a month you're going through and like percentage-wise distributing it to these other 4 accounts. So for me, I guess the way I've applied this that has blown my mind is for tax planning. Back when I started my business in 2016, I used to get really stressed out about taxes because I couldn't really figure out how to estimate them very well. I was doing it on my own, and it was just something that I feel like come tax time, I would just be struggling to understand how much of what I thought I'd saved for myself I actually owed to the government. And by doing this envelope method, having a tax account that right now I currently put about 20% of everything that comes into my business, 20% of that goes straight into this holding account for my taxes. And then the great part now, I brought an accountant on these last couple years, is they help me figure out, okay, here's what we think you should owe based on your estimates from last year. And then as the year goes through, they let me know each quarter how much they think I should adjust based on my real-time earnings. And the cool part is I often have more than enough in that tax account just by doing the 20%. Now, again, if you're someone who's into taxes and all of that, you're going to be like, Logan, sometimes it's less than that. Sometimes it's more. For me, it just worked this blanket amount that I can then prepay do my estimated taxes, and I'm never scrambling. Like come tax time, it's maybe I owe, an extra 2% that I hadn't accounted for. Another way that I love this Profit First method as an event planner is it has really helped me better understand, like, when I invoice a client for $2,000, how much of that money do I, as Logan the employee, get to see? And that's where that account called owner's pay is just really helpful because, again, he sends out like how you can kind of calculate what percentages you should be at, but essentially 100% of the money comes into your income, and then you're sending 20% to taxes, 20% to operating expenses, 5% to profit, and if you add those all up, that's 45%. Then that means 65% is left over to pay yourself. And those are just example percentages. Mine are different. They've also evolved is a cool part as you grow as a business. And your business might have more operating expenses, so you have to pay yourself less. But it was kind of cool at one stage I was able to be like, okay, 50% of what comes in is actually going in my pocket. And that was a really cool way for me to think through what I was charging, because you've heard us talk about it on the podcast. I feel like I've mentioned it here in some videos on YouTube, but the event industry can feel very arbitrary about what to charge. Some people are charging, $20 an hour when I first got into the industry, and I've heard upwards of $200 an hour for what some people charge. People do project rates, people do flat fees. They're all different ways to structure yourself, and this video is not going to tell you which one's the best one to do, but this Profit First method was really helpful for me to get a better gauge of understanding what I was charging for and then how much I was actually seeing while factoring in expenses and taxes. And lastly, the fun part of Profit First, and probably the reason why I got so excited from the beginning, is it's taking profit first. So one of these accounts is called Profit. And this is one where he makes a point that, like, right now you might be like, Logan, I make no profit. I'm barely scraping by. His whole point is you can even just put like 1%. And it's always a percentage because a lot of us as entrepreneurs, our work fluctuates. I can't remember in the book if there was something about doing flat numbers, if that's better for your business. But anyway, he was all about, but this is one of my favorite things about this book, is having this profit account, and you're supposed to use it for fun things. You're not supposed to invest it back into your business or pay off business things. It's literally meant for fun. And you do this quarterly. You would take out half of what's in that profit account. So there's still money left in it at all times, but you take out half of it, and that's something for you to do something fun with. And even if it was $20, you can go out and buy yourself a drink or a nice coffee or a lunch or something. And I still remember my first quarter that I did this, I had enough money to buy us like a TV that we'd really wanted for our apartment. And that was so exciting for me. And it was just a fun process to be like, yes, my business is paying for this TV. So hopefully that helps answer a few of your questions you have about the Profit First method and how it would apply to you as an event professional. Again, I'm not an accountant. I'm not a financial advisor. I'm going to link to all of Mike's amazing resources and things here, but it's just been something that's been really helpful for me. And past Logan, if you could have found this video and instituted this method earlier, I think you would have been a happier entrepreneur and had a better idea of where all your money was going when it came in and came out, and had a better idea of what you as a business was making versus what you personally were making. I highly encourage everybody watching this, go try the Profit First method for you and your business. I promise you won't be sorry. I want to thank you for watching, and I'll see you in my next video. Bye.